guys, this is Perdomo, the lead strategist, and you're listening to Latinos in Real Estate Investing podcast, and or you're watching us on YouTube. First of all, I want to thank you for giving us your attention and listening to our podcast and or watching us. And if you haven't done so yet, if you can give us a thumbs up. If you're listening to the podcast, give us a thumbs up. It really helps with the algorithm so others we can get this information out to more and more people. In this episode, I want to talk about the latest numbers are out for the Consumer Price Index. I also have my report from National Association of Realtors, what's happening in real estate, and my thoughts. I'm going to give you the facts based on the nationwide numbers, and I'm going to give you my thoughts on what I think is going to happen in this market, in the economy overall, and more specifically in the real estate market. I think that the real estate market is heading for a cool down for sure. Been saying that now for a while. Inventory is still pretty low, but let's get right into the data, okay, guys? And let me share this article here with you. And this is the monthly indicators from the Poconos Association of Realtors, but this is for the whole. There's some parts here that covers the whole country. Here we go. It says the average 30-year fixed rate mortgage exceeded 5% in April, the highest level since 2011. Guys, so interest rates are up. We've talked about that. According to Fannie and Freddie, the recent surge in mortgage rates has reduced the pool of eligible buyers and has caused mortgage applications to decline, with a significant impact on refinance applications, which are down more than 70% compared to this time last year. So basically saying, hey, interest rates have gone up. So that means that now if interest rates have gone up, person buying a home's payment is higher, therefore their affordability, their income hasn't kept up with the interest rates, the affordability goes down, so there is a shrink in refinance application. That's basically what they're saying. As the rising cost of home ownership forced many Americans to adjust their budgets, an increasing number of buyers are hoping to help offset the cost by moving from bigger, more expensive cities to smaller areas that offer a more affordable cost of living, like the Poconos where we live, right? So we're in the Poconos in Monroe County. It's more affordable. We're close to New York City, close to New York, and those listeners around the world that are listening to us, or California, you guys have neighboring states that are more affordable. Same kind of thing, but you can still kind of commute to those big cities. That's what we have here. Affordability challenges are limiting buying activity, and early signs suggest competition for homes may be cooling somewhat. Nationally, existing home sales are down 2.7 as the last measure, while pending sales dropped 1.2%. So existing home sales are down by 2.7%, and pending sales dropped 1.2%. Marking 5 straight months of under contract declines, right? According to the National Association of Realtors, inventory remains low, with only 2 months supply at the present, and the increase from this time last year. And home prices continue to rise, with the median existing home at $373,500, a 15% increase from this time last year. So houses are overall in the national market, where we have a 15% increase from this time last year. That is humongous, guys. Homes are still selling quickly. However, multiple offers are common in the market. So let me unpack that a little bit here with you guys first. So inventory is still low. There's only 2 months of supply on the market, which means that there's still demand. The problem is inflation, right? The rate of the way these prices and these houses are going up, and interest rates going up, it's putting people out of where they can afford it. I'm going to show you now, as I record this episode. Today is May 11th, 2022, and the CPI, the Consumer Price Index, just came out this morning. I want to share with you that data on how inflation is doing, and let me share that article with you from CNBC here. So the Consumer Price Index accelerated to 8.3% in April, more than the 8.1 estimate, and near the highest level in more than 40 years. So basically, guys, inflation is still freaking rampant, right? 8.3%, last month was 8.5 or 8.9, somewhere in there. CPI, which is the Consumer Price Index, which excludes food and energy, also was higher than expected, rising to 6.2. Shelter costs which comprises about 1/3 of the CPI, rose at their fastest pace since 1991. Inflation-adjusted earnings continue to decline for workers, falling 2.6% over the past year due to surging costs. Let me share this here with you. The CPI gains came even through energy price declines, 2.7% for the month, including 6.1% drop for gasoline. Yeah, so they're saying 6.1% drop in gasoline. How many of us are actually feeling that, right? The Consumer Price Index, the broad-based measures prices of goods and services, increased 8.3 from a year ago. We talked about removing volatile food energy prices, so-called CPI, 6.2% against expected of 6% gain. The month-to-month gains also were higher than expected, 0.03 on the headline CPI versus a 0.02. Basically, guys, inflation is rampant, right? This at 8.3%. We had nationally, I gave you the National Association of Realtors numbers, that we had a 15% increase over in housing. My predictions is that we're going to have a cool down. So mortgage applications are down by 70% on refinances. Now we only still have 2 months of inventory nationwide on the market of single family housing. So on that basis, we're still pretty strong. But I think that here in the coming months, we're going to see an influx of inventory coming in, because we're going to see a retraction. We're already seeing a retraction of buyers. The pool of buyers is going to decline because affordability is high. So if you're playing in the real estate space and you're playing as an investor and you're a flipper, it's time to reconsider. It's time to reevaluate the strategy. I know we are in our flipping business. You want to be playing, I would be playing in the affordable space. You got to figure out what that is for you in your market. What's that price that even as interest rates go up? First of all, people will always be buying houses no matter what's happening. The question is, what is that price point that you need to be at so you can sell those houses? That's what you need to figure out as an investor. I think we're headed for a recession. Actually, I think we might be in the beginning of a recession, and I want you to consider that in recessionary periods, Warren Buffett says when everyone's buying, be fearful. He says when everyone's buying, be fearful, and when everyone's fearful, when everyone's selling, be aggressive. And if a recession indeed is coming, I personally believe that we're in the beginning stages of a recession. If that winds up to be the case, be ready to take advantage of opportunities. There's going to be some blood in the streets, and be ready to. I will be getting my finances in order, my investors in order. Be ready to take advantage of the potential opportunities that are going to be out there. Those are my thoughts. Again, I think we're going to see a cool down. I don't think we're going to see a major decline in the market, but I definitely think we're gonna cool off, and that also depends how aggressive the Feds continue to increase interest rates. Here's the thing about the Fed. So if you guys remember, in 2020, they said during COVID, we are committed not to raise rates through 2024. Then they came out and they said, inflation is transitory. All of it wind up being bull crap. All of it wind up being bullshit, right? So we got to take what they say with a grain of salt, right? Because they committed to us, we were here as a company, we were creating our strategy, right, based around what the Feds are saying, what they're committing to do. They said, we're not raising rates through 2024. Well, it's 2022, and now they've raised rates twice this year, and now they're saying we're not going to raise it more than 50 basis points at a time, but we're going to raise it at least a couple of more times at 50 basis points. So we're expecting them to raise the rate. So everything that they said they didn't honor their word, and I get it. They have to adjust based on what's happening, but they don't freaking know, man. They're guessing. Not that they don't understand the market. They got really intelligent people there, but they can't predict what's going on. When they said we're going to keep the rates down, we're committed not to raising the rates through 2024. Well, how much does that mean, right? Like, what the hell does here we are, they've raised the rates twice on us in 2022, and they had committed back in 2020 not to raise it through 2024. And it's just a joke, man. It's just a joke. And we got to be smart. You got to be playing your own game. You got to be looking out for what's best for what's happening in your market. You got to be financially educating yourself. You got to be paying attention to what's happening in the market. You got to really be paying attention so that you can take advantage of the opportunities. I'm not saying take advantage of people. What I'm suggesting is take advantage of the opportunities that's going to be out there, right? I had one of my mentors, when I first started investing in real estate professionally, said to me, whenever you are if you're in an airport or wherever you are and you hear anything about the interest rates, your ears should perk up and you should be paying attention, because that's going to have an effect in your business. And not only do I do that, but I follow it diligently. The Spanish in me comes out sometimes. Diligently, I follow that diligently, and I pay close attention to what's happening in these things. It doesn't matter as a human race. If you're Latino American, there's a lot of Latino Americans that we are taught to work hard, right? In my culture, where I'm a first-born generation American, where our parents came here, and my parents came here, and it was like, hey, go become a doctor, go become a lawyer, go become an engineer, right? Like, doctor is the pinnacle. Even some doctors, right, don't have financial education because it's not taught in school. So I'm challenging you today is to go and get financially educated and understand these things. Learn how to protect yourself, right? Be careful with credit card debt. Credit card debt is not fixed. I would be very, very careful right now. Credit card debt is variable, so be careful. I would be shrinking down my credit card debt, because that's gonna, as the interest rates go up, your credit card debt, your credit card interest is gonna go up. So you should be paying attention to that, what's happening there. I would say away from ARMs, from adjustable rate mortgages right now. I would be being very smart. I also think that rents are going to be going up this year, because in recessionary periods, if we indeed are in the beginning of a recession, we'll know in 6 months, right? If we indeed are in a recessionary period, people historically go and rent houses, right? So there's going to be a demand. There's already a high demand for rents, but there's going to be an even higher demand for rents. You should be thinking about your strategy on how you're gonna play this game, and what financial education and getting a financial education. So anyways, guys, that's my thought. This is the latest data out from the National Association of Realtors and the Consumer Price Index. And basically, guys, inflation is rampant. Inflation is still rampant. We're still at a 40-year high, and we need to be paying attention, and we need to be getting financially educated, guys. The rich get richer during inflationary period, and the middle class and the poor get crushed in the middle of it. Guys, I appreciate you guys. Leave me a thumbs up. Hey, let me know what you think, right? You think this information was valuable? If you got any additional data you'd like to share it in the comments with me. Drop me a thumbs up. Like, share, subscribe. We really would appreciate that, so we could get this content out to more people. Appreciate you guys. Thank you for watching. This is Martin Perdomo, the Elite Strategist, and you're listening to Latinos in Real Estate Investing Podcast. Peace out. So guys, if you like this video you just watched, click on this video up here, and it might be something you might like. And guys, I really appreciate you guys watching. Remember to like and subscribe our channel. We really appreciate it. Thank you very much. Peace out.